Hey everyone, welcome back. My name is Levi Woods. This is Drawbridge Finance. It is Tuesday, July 8th. Apologies for the delay today. I got stuck on the west side. I live in this beautiful place, Kelowna, British Columbia, Canada, which we're kind of in like a little flat area in the middle of a 75-mile long lake, which is massive and beautiful. Actually, they're just a couple blocks from it. It's fantastic, especially this time of year. Tons of boating, tons of paddle boarding, and all the stuff, all the water sports this time of year. But there's this tiny little bridge, it's actually a pretty big bridge, but it's a bridge across the lake. And when traffic gets backed up, and I was on the west side this morning, so I couldn't get back home. It was just like absolute gridlock. I don't know what happened. They didn't even say there was an accident or anything. It was just crazy. So I'm like sitting there with everybody else and just like an extra hour of travel on a trip that normally only takes me like 45 minutes. So apologies, and hopefully you guys are having a slightly cooler day than I am, because it was hot out there. I've been at it for a couple hours already. We got some early trades in this morning, and then I zipped over cleaning up the family farm. So that's one of the things about being a trader that I love, is that I can do these kind of things where I can put on some trades, make some money, go about my day, get back to my desk, do some more trades, and that's what we're talking about here. So remember, I don't offer financial advice in any way, shape, or form. It's just what I'm doing. So thank you for joining me. Thanks for the delay. And I see Mateix is on. I see Jim is on. Kevin is always on. Thank you so much for joining me, Kevin. Terry's asking, says glad I got here. Wonder if you could get your opinion on ATRL. 30 degrees here. That's awesome. I love it. I love the summer. This is like my favorite time of year. Okay, let's jump into what is going on in the market. Let me just pull up make sure I've got everything here. Let's see what's going on in the market, and we'll take a look. Lots of consolidation happening near the top of these Bollinger Bands. So SPX, consolidating near its all-time highs. This is the daily chart we're looking at. NQ, same sort of thing, highly correlated indexes, both S&P 500 and NQ. Russell 2000, I feel like it's poised for a breakout. We're at 0.84% again today. We saw a little bit of a pullback from Friday's highs, but definitely broken out of this downtrend. We're trading near that VWAP, and lots of room to run on this particular underlying. So the Russell, IWM, any of those trades, I'm looking for long deltas in those. NQ, SPX, I'm trading neutral right now, because there's just as much chance that we could pull back as we could go up. Dow Jones trading near the top of its range, and it didn't actually hit all-time highs on Friday. We had some higher days prior, if we look back in December and then at end of January. VIX marking 16.74, so volatility really falling, and with that we're seeing gold kind of come down a little bit. Again, gold's still in this very, very upward trajectory, and will probably continue to do so. U.S. oil right near VWAP today, so we've got point of control above the current price. I'm playing this. I don't have any positions on, but if I was playing this, I'd be playing it neutral, and I would be targeting the zone down here between that 64 and 60 level. That's where I like to build my profit tent, so that if we see a retracement into it, I can make a decent amount of money. I don't hold an oil position all the time. What I do is I look for entry. And right now, what I would want is entry somewhere near that 64 level. I want to wait until we break into that, and then I'll put on positions that have a profit tent down here. That's how I'm waiting patiently. Sometimes that is the play. What else are we looking at? Apple trading at 209, below its moving average. AMD slightly above its volume weighted moving average. Adobe below. Go through a couple of these. MicroStrategy 398. We barely talk about Bitcoin on here. Let's pull up Bitcoin. We're inside of the range that is typical. I would be watching this VWAP around that $100,000 level. So looking for a slight pullback, and then pressure is definitely to the upside. Tesla trading right now at 301 near the VWAP. Lots of volatility in Tesla, so that's a fun little trade. What are you guys looking at? What stocks do you want me to pull up? And I have a couple of pre-questions. I know I'll get to yours, Terry, but in the Discord this morning, I was asked about Rivian. So we're going to pull up Rivian and Automotive. I've got it loaded up here. We're going to look at Investing Pro. One of the things I like about Rivian right now, trading at 13.17, they've got more cash than debt on their balance sheet. This is extremely good, but they have weak gross profit margins. So, you know, they don't make a huge amount of money, and we don't know if they're going to be profitable this year or not. Fair market value, though, according to Investing Pro, 1245. So this is a 5.5% down from the current level, which is great. I mean, when I look at stuff like this, what it means is I don't mind playing quite aggressive cash secured puts. You know, very, very simply, just sell premium against that position. So if I go over to Rivian on Seeking Alpha, these are kind of the two programs that I like to use. So if you are interested in checking out kind of the paid resources that I get to use, check out my description down below. You can see the direct links to Seeking Alpha. There's always discount codes, or for Investing Pro, investing.com Pro edition there. Valuation is listed as a C on Seeking Alpha. The growth is a B+, and the profitability always is a scary concern here at an F. But again, that's where that cash factor, the fact that they have cash, is good, even though they're not quite profitable. So we would prefer to invest in profitable companies, but it's not so bad. 4 out of 29 for automobile manufacturers. Now, how do we play this? Well, looking at the options chart, if we look at a chart, let's go out to August and we'll look at the puts. How much value can we get for the strike? So right now it's trading at $13. If I was willing to buy these shares for $13, I could actually get 99 cents right now. That's a massive return. If we use our calculator from, you know, I've always got stuff loaded up on here, but $99 divided by $1,300. It's not even that. It's only $1,200 because that would be the max loss on that trade. If I collected 99 bucks, the max loss would be $1,201 if Rivian went to zero. And if we do that math, it's 8%, and that's in a period of about 40. What are we at? About 36 days. So around 40 days. If we were to collect that all the time, if we did that $40 or 40 days, and then we times that by 365, this is like the most simple math equation that I use all the time. That's a 75% return on capital. All I'm doing is agreeing to buy the shares for 17 cents less than the current price. So these are the type of positions that I think, for smaller accounts in that like 25,000 range, we might be able to put on one position like this, where this is like 4% of our account is allocated towards a position, like one lot of Rivian. And the idea would be that I would try to collect 75% annual return on that. It's pretty amazing how much premium there is in some of these kind of riskier positions. And worst case scenario, I'm buying the stock for cheaper than I would be buying it now. So from a straight theta perspective, I think that those trades work extremely well. Collecting 99 cents for selling the 13 put. So that's kind of how I would play those. We can get a little more complicated with it. I mean, you can see where the bid-ask spreads are, but mostly with these small positions, cash secured puts are the way to go. I think that's my opinion. Okay, let's look at ATRL. Sorry if I'm a little tired today. Man, we've just been flying at her. So. Is this the right one, Terry? We've got Atkins Realist Group, Wall Street rates it a buy. This is it's on the TSX. Is that the right one? 1 year, 68%. I don't know. Is this SC Lavalin? Yeah, thanks, Terry. Is this SC Lavalin? They just changed their name? Well, they've got all the government contracts anyways. I'm a bad Canadian. I don't love playing Canadian stocks. It's just, there's not enough coverage on them. It's always hard. It's like they're not covered by anything. So what's the valuation? I'll go look at and see if they're here. But how do you do research on this? And the only reason I say it, it's not like I can't do the research. I could do it, but here's a little bit of data. There's a 15% downside, which is decent. I've just become a little bit lazy in my older age. You know, we've been doing this. I've been doing this for so long. I've been looking at stocks and diving into reports and reading stuff. And it's like, you know what? The computers can do it so much better than us. They can read that stuff faster. They can analyze the things, and they can like come up with values like we just showed. The fact that I have subscriptions to things that just tell me what the value of the stock is based on all of the metrics without me reading a single financial report is amazing. As soon as we get outside of that scope, though, and we're into stocks that are, you know, not covered, if they're just not covered, then all of a sudden I'm back to square one. I'm like, oh, what? I have to go read a financial report again, and then I just don't even want to do it anymore. So admittedly, I've gotten lazy with this kind of stuff. It doesn't mean that they can't be good. If we look at a couple key points here, RSI suggests the stock is in overbought territory, trading at a high earnings multiple, trading at a high price to earnings ratio. These are all bearish signals. And then analysts have revised their earnings upwards for the upcoming period. So, with these types of things, I would look at the options chain, and I would say, is there value in selling near that fair value, 85 strike put, or building, put credit spreads, or maybe even do a call credit spread against this, depending on how wide the spreads are. Another problem with companies on the TSX is that there's just not enough volume. You know, there's not enough Canadians trading them, and there's not enough people outside of Canada trading options to make the spreads really viable. So with these types of positions, I just look at it and I think, keep it simple, short puts, or buy the stock if I think it's going to go up, but I wouldn't be buying at these levels. That's me personally, and that's based on solely on looking at these AI algorithms that seem to be quite good. Thank you. I love that you think I'm the best. I'm definitely not. You know, I just play these statistical trades. That's all we do. It's just like we look at trades and it's like, okay, 69% probability. What do I know about that? I know that a 69% probability of profit is likely going to be an 81% probability when it all comes down. So that's what I target. 69% probability trades all the time. I just rinse and repeat and keep my theta decay positive so that I'm making a little bit of money. I'm less concerned about theta than I was at other points in my life. You know, you can get like crazy about theta. I'd put a ton of risk on. I'm playing a lot more positions like double diagonals, double calendars, things that have a little more versatility to them and a little flatter profit curve, less theta decay, but bigger profit spikes to either side. And they've been working out pretty well. So a couple things I'm just looking at in general. ARCG, one of my favorite trades this year. If you guys are looking for ETFs that are relatively inexpensive, that have tons of options liquidity on them, they are ETFs, so we don't have like a fair market value on these. But what happens over the course of the year, you can see this stock trades. Like if we look at the $28, if I was to draw some lines on this chart, just at the $28 level and the $24 level, aside from February to June, basically, where we saw this drawdown, this stock just trades in a range all the time. And for $25, it's got a liquidity, and I just love it. You know, from an options trading perspective, if you're looking for positions, you want to play especially diagonals, poor man's covered puts, poor man covered calls, things like that, where or just diagonals or calendar spreads. This type of fund, I can't get more excited about it. They're just pretty awesome. Let's look at ARCK, which is another one, and these are the Kathy Wood ETFs. So she's got, she does a lot. The goal with this fund is to make 15% a year, ARCK, and you can see 54% on the year over the past 1 year. But if we look back at the 5 years, it's actually down. And look at where it's sat. Like, look at this range. You know, that $40 to $50 range. We're on the top side of that right now. And could we see another, like blow up like we did during COVID? Pretty unlikely. You know, this fund is, it just kind of grows, but it stays in these ranges. And this is, aside from COVID, if you look at how these kind of trend, like we see a lot of similarity in there. And I love these positions because there's so much premium in them. So if you're looking for things, this one's a little more expensive, obviously, our K being $70. Very, very simple to play these. You can either do, you know, covered call positions, short puts, poor man's covered calls, things like that that have a slightly positive delta, and there's lots of theta decay. Mike Mueller says, I'm so super late and you're still here. I'm Mike, I started super late. I didn't even start till noon. So we're all late today. It's good to see you. I was thinking about you. I was stuck in traffic and I was like, I have not been doing any zero DTE trades. I think I did one last week. And I thought, I wonder how Mike is doing with his zero DTE. So could you enlighten us? Could you let us know? I know you're doing, if VIX is retraced or if it's lower for the day, you're doing a reverse iron condor. Correct me if I'm wrong. And then you're doing either a fly that you're taking profit on or an iron condor for days where the VIX is elevated. So what trades are you putting on, and how has it been? Has it been good? I feel like the VIX, if we get back to that VIX level, which is super important when we're doing day trading of any type, you know, when we see these volatility spikes on these particular days, those are days where we really want to be in flies or selling premium. And days where the volatility is low, these VIX is low, I mean, it's hard to get premium. Mike says, zero DTE rocking. Everything you just said has been great lately. That is awesome. I love it. So, you know, this, in these kind of days where we see this SPX, like zero, you know, just small candles. Like if we look just for candle size. So when I say that, you know, from the top of the candle, let's look at this candle here, this red one. So the top of the candle to the bottom of the candle, that is the intraday move, and you can see how large that is. Well, a lot of these days we have an, from open to close, we actually have a very small range. You know, look at how tiny these candles are compared to these big candles that were occurring. And this is where zero DTE is good and bad. So if you're looking for big moves, not so good. If you've got like a reverse iron condor on and you want the move to the outside, you don't want a small little candle. But boy, these candles have been tight. The trading range has been tight, even though it's been going up and up and up. So that I'm glad to hear that is working out well. But with the volatility low, you know, I hope that it continues for you. So yeah. Any other questions, guys? I feel like, as I said, I'm running late today, and I have so much to do. We got so much to do. So if you've got some questions, let me know in the next minute. Otherwise, I'm going to bid you adieu. I'm going to get back to my trading room. If you guys aren't in the trading room already, you can check it out on Discord. You can go over to patreon.com/drawbridgefinance. You can sign up for free. You can get the alerts. If you want to become a paid member, you can see the actual trades I'm putting on. You can see those real time in my Google Sheets. I share all that information with everybody. It's pretty amazing, and we're killing it. You know, just on a day-to-day, week-to-week basis has been pretty awesome. Mike Mueller says, any benefit to doing a poor man's covered call like trade with a zebra, or just extra complicated? I have tried zebras so much, and maybe my timing is off. I don't love a zebra setup. For those of you who don't know what a zebra is, it's a selling an at-the-money call, buying 2 out of the money calls to pay for the extrinsic value. So it's called a zero extrinsic value back ratio spread. It's a tasty trade, kind of original trade, or tasty live trade. What it does is it gives you around 100 long deltas to the upside, and it gives you a valley of death just below the current price. They're very great in a bullish market. I have tried them and run with them successfully. The problem is the value of death is pretty big on a PMCC in general. So PMCC has obvious theta decay. A zebra has less theta decay but costs more money and has more risk. What I really like is I like a hybrid version where I am selling 2 at the money calls and I'm buying 3 out of the money. Sorry, buying 3 in the money calls. By doing that, I get the same long delta and I have a deeper valley of death still, but I actually have positive theta decay from that. And it is working pretty well. One thing, Mike, I'm just going to run this over you guys really quickly. And it's going to be maybe hard for you to follow, but consider this. So a ratio zebra, so selling 2 at the money, buying 3 in the money calls, and then short selling 100 shares of stock. Now doing that gives you 0 upside potential, like 0, but it gives you a massive hedge. So you have effectively a free hedge in play by doing that, because the zebra won't lose as much as the 100 shares of stocks will gain if the market drops. And if the market goes up, you get a 0 gain. So you basically have a free hedge in place. I'm running some right now. I've tried 2 different ones. One where I have the short calls and the long calls on the same date. It doesn't work all that great. The real bang for your buck is when you sell the short calls at a shorter duration than the longer calls that you own. So again, you're selling short 2 calls, short duration, buying 3 calls, longer duration, and then selling 100 shares of stock. Chart that, take a look at it. Pretty awesome hedge. I've been running it for a little while. And of course, as soon as I put it on, the markets are running up. So I had no need for the hedge, but we'll see what happens. You just never know. Yeah, what else is going on? I have a link down below for Liberty Signal. If you got, that's a friend of mine, Felipe. He runs an awesome service. It's swing trading, totally different than the stuff that I do. Absolutely killing it. I'm looking at one of the positions we're in his service right now, up 9% today. Just absolutely smashing it with those. So if you guys haven't checked out my links in my videos recently, just have a scroll down, take a look, and see some of the people that I've aligned myself with, because what we're trying to do here is we're trying to get rich together. And I know that there's everybody wants a little piece of us monthly, you know, like I pay people, I get some services for free. We all use these resources, and then I charge people for my services. You know, it's a back and forth. But what we're doing is we're trying to find the best of the best, and we're trying to share that knowledge that suits certain traders. Like, you know, I know there's lots of traders out there that are never going to sell a covered call, or they're never going to try that little hedge that I just explained. But they're really into swing trading, and they're really into day trading. And that's why, you know, I try to align myself with good people that are genuinely trying to help people, and they charge minimally for their services and have awesome return on capital. So, and Mike says, the market will always do the opposite of what you want it to, usually immediately. It's funny because I put in these hedges it's actually been a pretty good year. The market has been doing pretty well, what I wanted, but you know, what I fear always is being like a little too long or a little too short one way or the other. So then I have to, out of just self-preservation, I have to just continue to have hedges on. So that's why I have that set up, and it doesn't matter because there's 0 cost to the upside. It's actually fine. You can just keep running up, and that's the beauty of that trade setup. It doesn't have any upside risk and has downside potential. So it's pretty awesome. Okay, you guys are great. Thank you so much. Appreciate your time. Take care, and I will see my patrons on Thursday. Everybody else, I'll see you next Tuesday. Have a fantastic day. Bye now.